All right, good afternoon, everybody. Event Trader here. About to get the week ahead underway and take a look. And we're going to get Scott in here and take a forward look at some of the earnings that are going to be out. And there are a lot of them, as you can see from my 1450 comment. Feel free to use that to follow along. Before we get into that, just a little bit of business. I would note that Chewy's once again getting defended around this 31 level. Looks like we're probably going to close right around there. I can't say I love this price action, but we are seeing the defense come in right in this 30 to 31 area. So just kind of watching this action play out. But let's take a look at the week ahead here. First, let's get into the key themes. And the first thing I wanted to note was obviously earnings season, and we'll circle back around to this. We're going to go into depth on it, but definitely a big focus on tech, industrials, and the energy sector. So all areas that are going to be pretty fascinating to watch and provide a lot of trading opportunities, as you can see with just that list down there. Moving on. Economic data with emphasis on Q2 GDP. First off, as I stated when we saw that Wall Street Journal article, this is the end of the Fed. The Fed goes into a blackout at this point now, so we won't hear from any Fed members until July 31st. This is not a coincidence. I saw Brett mention the same thing. This was put out specifically. This basically is the Fed saying that it's a 25 basis point cut. They didn't want the market getting ahead of themselves with that 50 basis point cut. And I think that might have helped lead to a little bit of the pullback that we saw here, but I'm not overly concerned one way or the other. I think most people would agree that we're not in line for a 50 basis point cut. Even Bullard, who's been calling for rate cuts, doesn't see it. So that was the Fed trying to get that context back in line there. So I think more than anything what it does is it pretty much nails the 25 basis point cut down for the 31st. But the econ data, we still want to watch from this perspective. Are the Fed going to be one and done, or is this going to be an easing cycle? And that's the key for us here. With that in mind, that Q2 GDP number out on Friday certainly could prove to be important in the readings going forward. The other two big data points that I was seeing, it is a relatively slow week on that front, but existing home sales out Tuesday and the durable order number on Thursday will also be key factors. So that then coupled then of course with all those earnings should give us a pretty fair idea of where the economy stands, as well as the PMI number 2. We'll get into that in a second. And then we have the ECB out on Thursday, and talked about it a little bit this morning, but there's talks of them getting uber dovish, perhaps for Mario Draghi to kind of clear the deck for Christine Lagarde before she takes over in October. I think this is the second to last penultimate meeting for Mr. Draghi, so I see the timing here. I really don't know what to make of it, whether or not the ECB will go down that route. But this could also factor into the Fed as well, because we talk a little bit about the divergence in monetary policy between the Fed and the rest of the world, with the Bank of Japan and ECB obviously getting uber dovish. It's something to keep an eye out on here, so which could cause the Fed to do some further cuts just to kind of keep in line with global interest rate levels. And then there's the preliminary PMI numbers. We get Tuesday night, Japan and Australia, and Wednesday morning, Europe, and we bleed into the U.S. here. So a nice global picture on the sentiment survey there, which should prove to be pretty interesting. So just again to recap for the U.S. macro, going through in that sector there, you can see a couple bond auctions. We'll want to keep an eye out on that. The existing home sales as well as some new home sales numbers. We got a trade report. I never really see that impacting markets all that much. And then, like I said, the 2, 5, and 7-year bond auctions. Petroleum data as always. And then one other thing to note, the House goes on summer recess at the end of on Friday till I believe it's September 3rd. So we might see some stories about the budget being passed, or at least the debt ceiling increased, so that we can move forward on that front. Certainly both sides have proved to be relatively amicable on that front so far anyway. We could certainly see that switch. Earnings we'll get into in a second. Switching back to the international macro. I talked about the PMI numbers and the ECB. We also get a German IFO business survey, Eurozone consumer confidence numbers out on Tuesday. So some big sentiment pieces out there. And also Monday night, Bank of Japan's Hiroki Kuroda, the Bank of Japan governor, of course, will be speaking. So a few items of interest from the international side. Then on the corporate conference front, we get JP Morgan's got a transportation and utilities conference. It's more or less it. But for the hearings, one thing that I did want to point out, and I glossed over it a little bit, and I got to go back and read it, but we do have the Mueller House testimony, and that could upset the debt ceiling talks too. The House gets a little too aggressive on that front, and the president, we've certainly seen that he's got a little bit of thin skin when it comes to that. He could get annoyed and perhaps start to try to fight out in the debt ceiling debate, but that I guess that's a side story. I don't really know what to expect from the Mueller House testimony, and I'm not going to try to imply too much. We're not a geopolitical site. We worry about how this impacts the markets, and my biggest take is that the biggest impact would be perhaps on the debt ceiling raise talks that are going on. I would be highly surprised if there was anything out there that all of a sudden had people rambling looking for an impeachment. We already saw what happened with the last impeachment process, with that getting beat down pretty handily. So with that in mind, wanted to break into some of these earnings, and I'm going to be joined here by blue chip trader Scott Smith. How are you doing today, Scott?
I'm hanging in there, Gav. Hanging in there, trying to stay cool.
Yeah, tough to do right now, right? I saw the. It's funny because I got my temperature and then I got the real feel on my AccuWeather thing, and the real feel I see going at 107 in about an hour or two.
Yeah. It doesn't help that one of my air conditioning units broke this week, of course. So,
of course.
Got a couple fans going, so if you hear any humming in the background, it's the fans.
All right. Well, you gotta get them going as much as possible, right?
Yep.
So let's break.
We got some time here. We got some time. What do we got going? We got lots going on, actually, right?
Yeah, we do. So figured we'd start going through this list of names and start picking them apart. But first up, we got Halliburton. I saw Schlumberger earlier. Relatively muted response to the Schlumberger earnings. A little bit of jumping around, broke down to 37.30, but it's bounced back to that 38.61 area, which is probably one of the few encouraging signs I've seen from the energy sector in a while. This was holding the 50-day moving average, so it kind of sets the table for what people are going to be looking for at Halliburton, and that is more or less a cautious tone around the environment, but certainly not raising the red flag, and certainly not one that I think is reflective in terms of the price action on what we should be expecting. Now, Scott, I know you always look at it as being as being an auction, and the price action is exactly where it should be, and I'm certainly not arguing that point. But we are seeing, perhaps with this Schlumberger reaction, a slowdown in some of the selling, which I think is worth taking note, because we're talking a lot about sector rotation and everything along those lines, and if we start seeing some people looking for beaten down areas, this energy sector is definitely going to be one of them.
Yeah, I agree. I can't refute any of that. So it's just been out of favor for so long. We're talking multiple months in a lot of these oil of service stocks like Schlumberger, Apache, Halliburton, etc. That so many months below the 200-day moving average, below the 50-day moving averages. Every attempt to break out above prior resistance levels or prior months stalls out. and goes through a deeper pullback. It's like one step forward, two steps back, and then eventually that just gives way to further downside activity, particularly when crude oil itself made some really strong headwinds there in the beginning, first 4 months of the year, rallying from a really poor corrective move in Q4 of last year. And then it started to roll over again. It just seems like, there's one step up, two steps down type of behavior going on in this group here. So, yeah, they're completely out of favor. They're totally underperforming. Does that mean money's going to eventually rotate into them? Yeah, possibly. Sector rotation's an obviously big component of the economic cycle and market cycles. But is that happening right now? Nah, like you said, maybe. It's not. There's too many.
They need the catalyst in there for sure. But again, earnings could be that catalyst, right?
It could be. Commentary. It could be. I look at 52-week highs and 52-week lows almost every single day, and the 52-week lows list is pretty much dominated by tons and tons of small energy names and mid-cap energy names and whatnot. So it's tough for me to really get on board that until I start seeing some sort of adjustment or change there.
All right. And we're on Monday, of course. Next up, we got Steel Dynamics, STLD. Their last report had EPS in line, revs in line. They had comments about steel demand that were positive, but it was definitely concerned over the steel supply picture at that point. When they last reported, we were watching them around that 33 area, which it would eventually slip down and break below all the way down to 25. It has bounced back a little bit. There's been talks about this space seeing a little bit of a comeback, but so far we got Nucor results, and they had some positive comments about steel pricing bottoming. We'll see if Steel Dynamic has the same, but I would say this. I do think that Steel Dynamics chart looks a little bit more enticing than I saw from Nucor and U.S. Steel.
Yeah, pretty much take everything I said about energy a few minutes ago and replace the word steel. And it's the same exact thing technically. That's pretty much it. I do like Nucor. Nucor always has been my go-to. Everybody has their go-to 2 or 3 stocks in every sector you look at. When I hear steel, Nucor is one of the first ones that pops to my mind. I've always felt it was a good one. But otherwise, even that's still relatively poor on a bigger scale with the rest of the steel sector. So maybe money flows into it. Who knows? Again, you got to wait and see.
All right. Next up, Scott, we're going to be taking a look at Whirlpool. You're just talking about your AC units going out. I woke up this morning to find my flavor ices all melted down and everything with my flavor ices. My fridge was out.
But you mean like ice pops?
Yeah.
How old are you?
Oh, you don't like flavor ice?
I'd rather eat a Ben & Jerry's or something a little bit more.
It's like $5 for a 300 pack of them. They're fantastic.
You're a child.
I'm watching the waistline these days, Scott. So, looking at Whirlpool, obviously at the basis of a lot of the trade battles here going on. Last quarter, though, was pretty decent. They beat by 26 cents. They missed on revs. Asia revenue was the difference on the that revenue miss. The company did note at the time it was seeing some pricing power, and it did beat on the key EBIT number, coming at $298 million versus $272 million expectations. It reaffirmed its EPS and cash flow generation numbers, which will be key. Had their investor day on May 23rd, which, as you could see on the chart, was right around that 200-day moving average. Obviously, what they had to say there didn't impress, but the price action move here, ripping back above that 200-day moving average, is nice to see. Looking to see if they could hold this breakout above the 140, we'll call it 140 to 142 area ahead of earnings, and see if they are able to at least get back on that top line growth there. But you got any thoughts on Whirlpool?
Yeah, it looks great. It's been really nice recovery effort off that late May corrective move there. Just one of the first stocks that just basically traded up like 3 weeks in a row in June to make a full recovery effort, and then just this recent breakout here, fresh multi-month highs. It looks great. Whirlpool, if you didn't know it, is actually a heavyweight in the XHB ETF. That's going to be your home, I think, what they call that, the home construction or the home builders. That's a home builders ETF, XHB. So that's been a top heavyweight in that they're helping that to lift higher. So I like the move here for sure. Obviously, earnings are going to be a wild card. You never know which direction it's going to gap. But with the move and structure that it's shown lately, breaking out to fresh 52-week highs, it looks like, I would favor further upside in this one with the sector action behind it.
All right, next up, we are moving on to Tuesday. Relatively quiet Monday, as we could see here. I'll actually be bouncing out early that day. Scott to go over to the Trader Expo at the McCormick Center here. So if anybody's going to be around there, we could always try to meet up for a cocktail. But we'll be moving on to Tuesday, and Biogen's the first one on the list, BIIB. They came off a 2-cent beat on revs. Some of the big drug numbers that the Tesiferta missed, Sprizanza, they beat on expectations there. The Tysabri drug beat, their Avonex missed, and their Inferion also missed. So stock was seeing a little bit of a relief rally that day, but at the time wasn't looking to chase. Recall they had the one Alzheimer drug that they had canceled ahead of earnings, which caused the stock to fall from 325 to 231. You can see that on the chart. But outside of that little relief rally, haven't really seen too much action. It's just been going sideways, and just really not sure there's been enough on either side for it to get below 220 or above 240 here.
Yeah, that's basically what you're waiting for. I mean, the stock has just gone sideways ever since it had that big gap down, and you're just waiting for the next new catalyst to either send it back to the downside, to fresh multi-year lows, or to make some sort of recuperation. So I honestly I don't have an opinion on this one at all, particularly that I can't pronounce any of those product names that you just mentioned.
Yeah, I was sitting there waiting for Craig to give me a dirty look if I
I don't trade. Yeah, I don't trade stocks whose products I can't pronounce.
Yeah,
that pretty much eliminates every biotech
from the pharma sector, right?
Yeah.
Just all those hard to pronounce drugs. You would think that they would come out with simple names like Blue.
But if there's an option trader out there, obviously you could probably put some sort of spread trade out there on this, on some sort of tight, some sort of straddle, strangle out there, iron condor, whatever you're into. The last, whatever you want to call it. But the last 3 months of pretty tight consolidation between 220, 240. There's a lot of option strategies out there on this one if you're into that. So you should be getting a gap of some sort, I would assume. So.
All right. Next up is Coca-Cola, which usually follows Pepsi. Did Pepsi already report, Scott?
Yeah, they did it about a week and a half ago.
A week and a half ago, right?
Yeah, they were a muted response for the most part, locked inside of that June range. They've been really, really strong year to date.
Yeah.
And then I highlighted they've been breaking below the 50-day moving average earlier this morning, around 130, 131.
Yeah, and PepsiCo had a pretty nice quarter there. So, KO is following that. Pretty much the same as last quarter when PepsiCo also had a pretty nice little beat there. And KO followed up with a beat of 2 cents by itself, a beat on revs. They also reaffirmed full year guidance of plus 4% organic revenue growth. The unit case volume saw growth in Europe and Asia, which was impressive given the current environment. Stock was able to rally following that, breaking above that 50 psych level, but it hasn't really gotten away too much. And it seemed like we saw a little bit of selling today ahead of next week's earnings.
Yeah, I agree. I don't really have much to say. Coca-Cola is a stalwart, in the market. So if it drops a little bit, where's it going to go? 50, maybe $50?
Yeah,
I don't know. I'd be surprised if it did anything bigger than that. It would have to maybe announce some sort of, I don't know, something crazy like it's gonna, it doesn't have some sort of partnership with Monster Beverage and everything else going on lately. I don't know. It's got too much going on lately. No real opinion on this one right now. Just as long as it holds above $50.
Okay. Next up, we got Harley Davidson HOG. Scott, you talked about some of the uglier looking charts out there, and this one certainly fits the bill. Another one at the center of a lot of the trade battles here that's simply just been weighing on sentiment. You got any thoughts on HOG here? Just to recap, beat by 11 cents, beat on revs, reaffirmed their FY19 motorcycle shipment guidance in their Q1 report. Also got a tweet from the president on that day on how fair the EU tariffs are on HOG. So not sure that did them any good. But at the time, the results were good enough to keep them over 40, but as we could, which was the 200-day moving average, as we could see, that did not hold pat. Companies said it would be helped by lower costs for materials and tariffs this year. So we want to see if that's reflective in this Q2 report.
Yeah, if you look at a monthly chart of Harley Davidson, you could see that the stock has been underperforming for 5 years. That's 5 years, going all the way back to 2014. It's just been out of favor for a long time. So it's got a lot of work to do just to get back to the upside there. Short-term trading-wise, you do have the 200-day moving averages around $37 or so. So if it's got to overcome that resistance, and then including the April highs in order to really get things going back to the upside. I'd say as long as it stays below 40, this thing is going to continue to suffer within its multi-year downtrend.
All right. Next up, we are going to take a look at Hasbro, HAS, a stock that has been seeing a lot of demand. Of course, they've got the better Mattel will be later on in the week, too. It's really a story of two toy companies here. Hasbro's got all the good stuff with the Star Wars and everything. Mattel, I think's got Barbie and all the dated stuff, it seems like. But at the time, Hasbro was ripping above the 100 level. It's surprised with the profit, thanks to digital growth and cost cutting, that provided a boost. It was a real surprise. There was some people that were concerned about it, but hasn't really gotten too far away above that 100 level. Came down and came back a little bit at earnings, but held 105 and is now pushing back up. You like to look at this chart, Scott?
Just looking at the chart, if you didn't tell me what the company was, yeah, I'd actually love it. Really nice turnaround play from the last quarter, gapping back up above a multi-month downtrend, back above 200-day moving averages. Really good price structure coming off the May corrective move. June, really good, breaking out above the May highs. Trending higher, looks great. But then you tell me it's Hasbro, and I bet you're like, meh. just not really a big... Yeah, I'd rather trade other stocks.
All right.
To be honest. So, by the way, did I hear that Toys R Us is reopening some stores? I don't know. Did you hear anything of that?
No. I'm
not
in the toy scene, so.
I have kids, so I did hear that they're opening up a few.
So you got kids. That's why I think that you would be interested in Hasbro.
Yeah, but I don't know. Yeah, it is what it is. But I heard they're opening a few stores, and I heard they're like going to be more interested in like making their stores interactive. So rather than just having a whole bunch of giant boxes on shelves, there's going to be like play areas, and there's going to be like just like to get the whole experience of like shopping for toys is going to be somehow different. So I don't know. Go figure. I don't know. That's what I heard.
Yeah. Well, like you said, not my scene. Unless they got flavor ices there, I'm out. So, all right, next up, we're going to work our way into that aerospace defense. Now, you were talking about this earlier, Scott. They had great quarters last quarter, but the stock reactions weren't always there. However, we did see a nice move following a little bit of initial skepticism. Taking a look at Lockheed Martin. Mm-hmm. They had a big 165-cent beat on the bottom line, and they beat on revs. They got their EPS higher, which all blew away expectations. Stock ripped above its 200-day moving average following that. Also going to want to take a look for any color on their Boeing joint venture. Boeing will be reporting the next morning, so that could be interesting. So just kind of want to see if these names continue to dominate here, and we got a few of them out there. But Lockheed Martin catching your interest at all?
Yeah, I do actually. This is one of those charts where I would basically take a snapshot of and print it out, and then just put it in a little booklet to remind myself of the great patterns I like to see after an earnings report. So earnings came out in April, and you could see price gapped up, and then it just pretty much went to sleep there for about a week, 2 weeks, just going sideways after that gap up in April. And that is usually the best time when you see that consolidation in context of that gap up, where the rest of the market's moving on to everything else and whatever the next big report is that's coming out. That's when you want to just swoop in nice and easy when no one's paying attention to it, and try to ride those continuous trends above the 20-day moving average, above the 50-day moving averages, etc., over the next couple of weeks, or in this case months, until the next earnings report. And I've seen this kind of behavior in stock prices repeatedly over the years. So we all know that I've mentioned that before as one of my favorite swing trading setups post a few days of earnings reports. So as for the stock itself, how it responds to earnings, I can't answer that. It is pulling back recently to the 50-day moving average, right around 352, 353. So that's definitely a line in the sand going forward to see how it responds. And I put Gavin to sleep.
No, I'm still here. Might have a surprise guest here for coming in. But so we're going to move over to UTX next, which is Collins. UTX owns Collins, I should say, United Technologies. So we, which has a 31% exposure to Boeing. So another aerospace name out here, put in a double top around that 144 area, and just a name to keep an eye out on here to see if it could get back above and break above that 144 level. I would say if they could post another strong report.
I'm sorry, Gavin. We're talking United Technologies?
Yeah, UTX, yeah.
Okay.
They own Collins Aerospace, which has a 31% exposure to Boeing. So I just wanted to point that out to people, that this is another name to watch on that Boeing front.
Now, isn't UTX also in the merger agreements with Raytheon, RTN?
There's talks about them buying them out, so we'd want to keep an eye out on that.
Yeah, so there's nothing. So that's whenever I start to see companies that are in the midst of potential M&As or et cetera, I think it becomes they usually kind of fall to the wayside for me from a trading perspective, because I don't like to get tied up with that kind of the ability to be blindsided, long or short on those types of headlines. But looking at the chart of UTX, it had been a really strong performer year to date, going right up into May. And then just about a month ago, when the rumors came around with Raytheon, it got a little hairy there. But it's been making a decent recovery effort back above the 200-day moving averages, sitting back above 130. I don't really have any opinion outside of that. So, yeah.
All right, perfect. Okay, next up we're going to bring in Chipotle CMG. And actually, Scott, we are going to have Damon jumping on and giving us a little color in this, because I know he trades it a lot. So, they had a nice 37-cent beat last quarter, beat on revs, raised their FY19 comp outlook, because it appears everybody in the world's going to Chipotle these days. Strong report all around. Quick side note, looking for any comments around avocado prices, because I know that they've been going skyrocketing higher, and that CVGW is a play there. But Damon, welcome in, and you got any thoughts? I know you've traded Chipotle a lot. You got any thoughts on this going into earnings?
No, I eat at Chipotle a lot as well. So,
the salads and the burritos.
So my kids love Chipotle, so we're there at least once a week, I would say. But the interesting thing about Chipotle, and you're seeing actually a lot more traffic there. Chipotle is cool again. After the scare or the health scare or whatever for a couple years ago. The place would be empty when we go in. But now you see long lines. But I think more importantly, you're seeing a robust food delivery business. So when you go in there now, you see the Grubhub and the DoorDash drivers standing in line to pick up food, and I think they've been offering free delivery for a lot of the Chipotles, or I'm not sure if it's a nationwide thing. So I would expect that to really boost comps. I'm not sure how much of that is reflected in the stock price, but I mean, it's had a big run. I mean, I bought it, I don't know, probably about a year ago, and it's more than doubled since then. So yeah, we'll see. I mean, I think it's interesting name that's going to put up really strong comp numbers for a while. But I can't say that I'm an aggressive buyer at these levels, given the huge run it's seen over the past year.
Didn't they get a new CEO or something like that a year ago?
Yeah, the Taco Bell guy, right?
Taco Bell? Okay.
Yeah. And, and so obviously one of the things about Chipotle is that, it's kind of a routine meal plan. I mean, in terms of, it had a few options, didn't really innovate that much, and you've seen them actually add some stuff specifically for the takeout menu that's actually not on the in-store menu. So they're trying to innovate a little bit. They haven't done a ton there, but
like what, Damon? Give us an example.
Well, they have like these new bowls, like something called like a protein bowl, for example, that allows you to put like, I don't know, 2 or 3 different meats in it, but it's not on the regular menu. I think you can only get it online, so they're trying to prevent having too many things on the menu and making things complicated. But if you're scrolling through on your app, then I guess they figure it's just easier to process that.
Well, one thing I would say on that front too is I know at Costco they had something, I think it was a portable AC unit that you could get $50 off if you got it delivered, but you couldn't get that $50 off if you bought it in the store, which led me to believe that they were just trying to up their e-commerce numbers there to try to like show the growth going on there. So you think that might factor into why they have a different menu for the delivery and stuff, trying to boost those delivery numbers?
Yeah, I think so. And I think part of it is just not to clutter the menu. I mean, you see, like, I know we go to some McDonald's or somewhere every now and then, you're sitting there for like 5 minutes trying to figure out, okay, what's on the menu and all this new stuff, do I want it? And I think it slows down the process of ordering the food, preparing the food. So,
all right, no, that works.
But well, I kind of tie that into the whole delivery company, though. Companies like Grubhub, I'm pretty bearish on these names. I mean, even though you're seeing I think the numbers will be pretty strong across the industry, DoorDash, Grubhub, Uber Eats. There's a real pricing war going on. And I literally, before I order food now, I literally go through all 3 of the food delivery apps and see who has like 30% off or 40% off, and that determines where we're eating out that day. And literally every day, it's someone is offering some type of special. So Domino's Pizza kind of complained about the aggressive pricing of these food delivery companies, and that's impacted their numbers. Their stock got hit pretty hard the other day. I think Grubhub could be in for some issues going forward because these guys are out there trying to grow market share, and they're giving away the house to do so.
Well, for what it's worth, Chipotle only has just less than 30 million shares in the float, so it's pretty thin, which means it's going to move. Grubhub, on the other hand, I don't know when their earnings come out, but that chart's obviously reflected the pricing pressures of competition there over the last 9 months, just suffering below the 200-day moving averages. That actually has about a 20% short interest in Grubhub, so you definitely have your short sellers agreeing that that's going to be a difficult space to go forward with.
Yeah, it looks like Grub's out July 30th, so about 2 months away. Okay. So, all right, no, definitely want to throw on the radar on the short side. So, okay, we're going to keep going through here. Damon, by all means, if you feel the need to jump in and discuss anything, you're always welcome.
Well, thank you.
All right. Next up, Gav, one more thing with the chart of Chipotle. So obviously you got the July lows and the 50-day moving averages all lining up around 717. Above that, you're going to basically look for a pop on such low float, maybe up to the $800 mark. And I did see that recently there was an analyst upgrade in late June that put an $870 target on it. So that's about 18%, 20% higher from where it's currently trading. A couple of research calls, actually. Somebody actually, it seems like it's kind of mixed. Somebody else has a $400 target on it, too, as well. So definitely mixed opinions on this one. But more importantly, take a look at what the gap was back in February with that earnings report. And that's that post-swing analysis setup that you want to pay attention to during this earnings season. Stock gaps up strong, does nothing for about a week or two within that time frame thereafter as the rest of the market takes its attention elsewhere. You scoop right in, and you can basically ride a nice trend over coming weeks. Doesn't work 100% of the time, but between this chart and the one that I just talked about earlier, Lockheed Martin LMT, you can kind of get a gauge of what kind of swing patterns I'll be looking for as the summer trickles on.
Okay. Next up, we're going to take a look at Snap. Scott, this is one that's been squeezing higher last quarter. Had a pretty nice beat by 2 cents, beat on revs. Guided their adjusted EBITDA guidance, DAUs above consensus, and rev guidance in line. So they keep bouncing back here despite the doubters. I know you're one that hates the company, but have been squeezing higher. We did see it run to 16 before pulling back about $2 here to that 14 level in front of earnings. What's your take on it? What are you doing with Snap right now? I believe you're still holding a small piece short, no?
Yeah, I mean, I was shorting this thing from pretty
like
much
the 20s, right?
Yeah, all of last year.
And just if people are wondering, it's $1 billion float with only about 7.7% short, but I suppose 7.7 of a billion shares is a lot.
yeah, all 2017, and just that big fake out that it made back in early 2018, where it tried to get back above 20 and then just rolled over there. That to me was when I was adding to all my shorts and everything, and I made a nice, pretty good trade on that for the most part of 2018, down to $5. Yeah, I still have an extremely small piece left because of the where I got in above 15s and 18s and 20s. So, yeah, I've seen it climbing back here the last couple months. I'm just not sold on the company itself, and you don't hear me say that often as a technician. But if I have to respect the trend here. So, yeah, it's doing great year to date, and it's been on the rise and everything. And I probably should have covered and swung it out to the long side. But man, I listened to my teenage daughter, and I just don't. The product just seems so trendy and fad right now that I just don't see it lasting over the long haul.
So are you grounding her if she steers you wrong?
No. It just seems just an odd thing. There's going to be another app that comes out, probably sometime in the next couple of years. Probably is one out there right now because I'm not cool enough to know, but that's going to just do something similar or better, and I just don't see this one happening. And not to mention, I mean, what are they doing ads? Like they're basically an advertising company, right? Just selling ad space to kids that send photos to each other. Again, I'm not cool enough. I don't even have an app on my phone, so I'm beyond that generation. But it just doesn't make the whole concept is just trendy fad to me, and we'll see. Like I said, strong uptrend. Technically, I could pretty much trade anything I want. So if this thing does get moving to the upside and starts gaining ground, holding above, say 15, 16, then maybe I'll have to change my opinion on it and go with the current trends.
Okay. Also, just while we're talking here, President Trump says that he will contact the UK about Iran seizing a vessel in the Strait of Hormuz, so want to keep an eye out on this action. All right, next up, Scott, we're going to take a look at Texas Instruments that had one of the more interesting comments last week where a lot of people were talking about a bottoming cycle in semis, and TXN kind of threw some cold water on that in their conference call, saying that these cycles usually last 5 to 10 quarters. And that really led to some weakness in the semis. Now, since then, people have been quick to wipe that off. We could see shares Texas Instruments fell from 117 all the way down to that 104 level at 200-day moving average, and now are right back up to that 117 area where they were when they reported that. So even with concern of a lower outlook possibly for the next few quarters, investors have not been shy to jump into this name.
No, not at all. This has actually been one of the strongest semiconductors, off those May lows there. So I like the name. You look at a longer term, monthly chart, and it's basically trading right back up to all-time highs from 2018. And I like those types of. I like that type of action. It's been up here a couple times, and eventually I just go with the flow and think it's going to be breaking out into new high ground very soon. So, yeah, it's one of my more favorite names that I do track amongst the semiconductor names.
Okay, that brings us into Wednesday. We're going to go a little bit more speed round here, Scott. We're already about 40 minutes into the segment, so we want to get it in before the close. So, and obviously we'll be talking about all these names throughout the course of the week.
All next week. Yeah.
But first up, Boeing. BA, obviously going to be a curious report. They came out with the commentary today about where they plan about what they plan on doing with the write-downs from the MAX 737 production slowdown. So we know that they're going to take a big hit, but people didn't seem to mind and rallied it over the 200-day moving average here.
Yeah, obviously, if you love, trading off of headlines, well, Boeing is probably the one that you've been scouring on the tape there for about the last 4 months, ever since all this 747 MAX issues have come about. So it definitely seems to be trading by appointment only, according to the headlines that are out there. Some good, some bad. Technically, it's got that 380 resistance that sits there right about from the April consolidation and the June high, so it's almost getting up to that 380 level. I'm not in any sort of rush to trade it or get involved with it, so that's pretty much it. To the downside, you got that 340 support around May and June.
All right, next up we got Caterpillar, obviously watching for commentary around Asia and ag spending in general. This thing's been going relatively sideways the last couple of weeks.
Mm-hmm. Weeks? How about months?
Months.
Yeah, months. We're going way back. It's trading exactly where it was almost a year ago. So you can go all the way back to June or August of last year, and it was trading around $136. It's been very whipsawish in between that time frame, but for the most part, it's just sideways choppy. And when I see that multiple months type of sideways price action, yes, there's nothing to really say about it technically. It's one of these names where you just got to wait for how the rest of the market responds to the earnings results.
All right, then we got FCX, Freeport McMoran, looking for color on copper prices, but one that's been showing a little bit of an attempt to get up, still coming into its 200-day moving average here, though, so got some work cut out for it.
Been out of favor for almost a decade. That's it. That's
good enough.
Everyone's waiting for this one to make a comeback and turn around, and yet every time it tries to do that on a monthly basis, and the rallies, they just eventually stall out and just roll this thing back down slowly. So they can't even keep. I mean, it's in copper and gold, and I think it's in oil as well, right? It's kind of like a
no oil exposure.
I think they do. I think they do. I think I read that like a long time ago.
They must have sold the unit off. I don't think that they.
Maybe they did. But either way, gold's been rallying really strong, and this stock just clearly is not participating with it. And copper has been, stabilizing pretty choppy, and this stock's just not even keeping up with that. So, yeah, it's not really the greatest one out there.
All right. Next up, General Dynamics, GD. They are stretching above their 200-day moving average here. So, interesting looking name. Not really like some of the other aerospace defense names out there, but trying to pop up a little bit at the moment.
Yeah, it's definitely the laggard from a technical basis in that aerospace and defense name. Out of favor for well over a year, trading below the 200-day moving averages. Just finally starting to pick up here in July, back above the 200-day moving averages. It's got to prove itself here. You know, what was scary was that I remember back in April, what happened there? Was that an earnings report that it gapped up over 190?
Mm-hmm.
Man, they slammed that thing. I mean, that thing had a nice, strong breakout gap going for it, and there was just no love for that stock whatsoever. Somebody was like, "Get me out." And they slammed that thing that day, and it just suffered thereafter. So you don't want to see that obviously happen again. You want to see something that seems to gap and then become a little bit more stable, like I gave for those other examples. But right now I have no opinion on this one.
All right, a few others that are reporting. We got Grainger, GWW, Knight Transportation, KNX, Norfolk Southern, NSC, Northrop Grumman, NOC's out. UPS will be out that morning. VFC, Cerner is going to be out. Citrix, CTXS, an Apple component. But Facebook, FB, Scott, they are going to be reporting that night, leading off a big set for the FANG names. We got Facebook there, and then we'll break into Google and Amazon, which are out Thursday. But obviously a lot of questions around the Calibra and just the business in general. But I think some pretty high expectations for this one going in as it tests that 200 psych area.
Yeah. It's actually made a decent recovery here the last few weeks off that early June breakdown to the 200-day moving average. Trading that's not yet back at all-time highs are still a little higher there, around 220, 218. But it's cleared a lot of resistance. It's climbed a wall of worry. It's doing all right. You definitely got to continue to favor the current momentum in this one above all the key moving averages and that fresh multi-month highs. So.
All right. We also have Ford out, Landstar, LSTR, another trucker, Netgear, ServiceNow, NOW, and then we got Tesla, always one of the favorites for the traders out there. It's been making a nice bounce back. Obviously, those delivery numbers that have been putting out have been able to impress some people here. But Scott, what do you think about Tesla? Would you be trading this one at all?
I haven't traded this one in a while, to tell you the truth. It's just been acting so poor. You know, again, like I said, that stocks that start trending month after month below their 200-day moving averages and 50-day moving averages, I really just take off the radar unless I want to be short something. And that was basically the case for this one year to date. Going into June, it has made a decent turnaround. I haven't seen any tweets coming out from Elon Musk lately or anything like that.
SEC put a crimp on that, but he's doing the old end around with getting emails out from other members of his management team.
Again, it's I like the product. I think Musk is a very innovative, eccentric, genius type of guy. But you know, bottom line is you got to show me the money, and this company is just kind of confusing, I think, overall, you know, with Musk at the helm and saying something else. And I don't know, it's too much confusion around here. Technically, it's just it's strong, but I don't really trade it these days too much. It's got to get way back. It's got to give me a little bit more signals that it's on a turnaround pace and you know, some cleaner chart action.
Okay. And next up, a name that I'm looking at for a possible long, maybe even ahead of earnings, Xilinx. XLNX. Scott, I know this is a name that you've liked in the past. Good 5G semiconductor play here. And, you know, the early indications are some of the 5G reporters that we've seen, or at least names with exposure to 5G, have been really seeing a boost there. So I got to say, I like this Xilinx going into earnings. And a name that I might have for swing along early Monday.
Yeah, you know, probably I've been pretty bullish on semiconductors for the last 2 months. They got whacked during that May corrective move, and there were just a handful of names that I picked up, Xilinx being one of them, when it broke below the $100 mark to challenge the 200-day moving averages. I've obviously taken a lot off on that. I'm still long some Intel off those May, June lows. I'm still long some advanced micro devices, which was showing fantastic relative strength along the 50-day moving average during that May corrective phase. And Xilinx, like I said, those are one of the names I'm still holding a small balance in. And yeah, let's go with the. I'm not going to argue with the trends at this point in time. 20 days are back above the 50s, all back above the 200s. Potential for this name to get into that bearish gap from the last earnings report in April, back up to the 130, 135 mark. So I'll sit around for that since I have a nice cushion.
Okay, moving on to Thursday. We are going to take a look at, Scott, a name that I know you've been short. I don't know if you still are or not, but 3M was a beautiful call by you. They've had some pretty weak results. Last quarter they missed by 27 cents, missed on revs, downside guidance. Their China exposure continues to just weigh in on them. They are a pretty significant component of the Dow, too, aren't they?
Yes, they are. Yeah, they're one of the higher weighted ones.
Okay, and they lowered their
price weighted
EPS and organic growth outlook. Their organic growth outlook now is at a decline of 1% versus prior plus 1 to 4%. So, Scott, you still like this as a short, or is this getting a little bit more constructive for you here?
I am out of my short. I got shorted post earnings back in April, and again, it was one of those setups that I said pay attention to stocks a few days after they report their earnings to see how they respond thereafter. And this one gapped down in April, it consolidated and went sideways for about 2 to 3 days, and then it started cracking below 190 going into May, and the rest of the market was rolling over at that same time, so we jumped on board a short and rode it all the way down to 160. Obviously, we were trimming some along the way there, but the balance, we rode all the way down to 160. I had a really loose stop on my final piece there around 170, and I got ticked out in late June. But right now, it's the 50-day moving averages have caught up with it as resistance. It's got a lot to prove. It's definitely a broken chart when you look at it on a longer-term horizon. It's below those 200-day moving averages and the 50-day moving averages for multiple months now. That means it's just out of favor from an institutional perspective. It needs to really just knock the socks off and surprise everyone and get the ball rolling back to the upside. So I'm not jumping back in this one anytime soon.
All right. Some other names. We got Cullen Frost out that morning. That's the one with the exposure to the oil industry, Scott, that I talk a lot about.
What stock is that?
CFR.
Okay.
I'm just going through these though. Comcast is out that morning. IP International Paper will be out. Newmont Mining, NEM, Oak Street, which was more about Howard Marks' commentary on the call. Reliance Steel. We also got ROK, Rockwell Technologies on the robotics space. Valero is out that morning. VLO. Get a little look into some of the refiners. The afternoon, though, that's where the big session is. We got Google and Amazon. Scott, which one do you want to talk about first here?
Let's go with Amazon.
All right. Pulling that up.
Or Google. Whichever one you had ready to go.
No, good to go on that. So the big thing for Amazon last quarter was they had that miss on revs, which was definitely a cause for concern. I'm just trying to pull up the chart. So, that was the one red flag that people were looking at. They had inline guidance, but the midpoint was a little light on that. So, just a name that's back up right at that 2,000 level, which, where was it? It was trading at just about 1,900 when they reported last earnings. So it's actually up since that last report. It's climbed above the 50-day moving average. So, a name that's going to be on a lot of people's radar, taking a look at how that's working in for the whole consumer spending. You got any thoughts on this one, Scott? I know you traded a lot.
Yeah, from time to time when I think it's setting up for some decent opportunity, mostly on a swing basis. So this is obviously one of the heavyweights from a market capitalization in the S&P. Basically, your top ones out there for the if you take a look at the holdings in the SPY, you got Microsoft, Apple, Amazon, Facebook, and Berkshire Hathaway, followed by JP Morgan and Google. So definitely a key player when it comes to overall market movement and whatnot. So it's banging right up against that 2025, 2050 all-time high from last year. It's got a nice, if you look at the yearly time frame, it's almost got this, I guess, a cup and handle type of pattern going on here, or some people would say it's a double top. But for me, I take a more bullish perspective at all-time highs. So there's definitely potential for this one to just break out and extend its roll to the upside. Gav, how are the prime numbers? Did we get any numbers about that yet?
The company stopped providing prime numbers.
Really?
Yeah, so $6 billion was what was expected, but they no longer provide the prime numbers.
Will they tell you after earnings what it was, or no?
Yeah, probably after earnings.
Okay, it will be included in the earnings report.
Yeah, but they're not breaking it out anymore.
Okay, I didn't know. This is also a heavyweight component in the XLY ETF. That's the consumer discretionary ETF. So you're going to have another, pretty big movement there. If you don't like to trade Amazon, you could pretty much go after the XLY instead, or maybe even the RTH. I'm not sure if it's in the RTH. You got to look. But anyway, it's a leader on the liquid momentum focus list. It has been for quite a many years now. And it jumps on and off accordingly, but right now it's at the number one spot on liquid momentum, so it's tough for me to take a bearish stance on that.
All right, then we got Google, which is coming off a rough quarter. The EU fines and stuff really impacting things. But their advertising numbers also trailed a number of their peers. So this is a stock that's been trading a little bit weaker since that earnings. Of course, we were sitting right up around 1280. Stock would end up coming all the way down to that 1020 level. It's gotten back above its 200-day, but you can tell people are a little cautious about this one going into earnings. Now, Google is a name that's posted a bad quarter and then just ripped back the following quarter. So I'm not overly concerned with my longer-term hold on it. I'm in it from the 700s, so obviously the price is fine, but definitely keeping a little bit of an eye on it here, as there's been a little bit more cause for concern.
Yeah, I love the company. I love YouTube. Everything's just the company itself is just amazing, I think. Technically, it has been stalling out and going sideways over the last year between the 1,000 and let's go with 1,300 level. So it's got a pretty wide 200-point base here, and it's sitting somewhere right in the lower half of that, around the 1130 area. So pretty much trading where it was a year ago in the middle of this range. And then, like I said earlier, when it's sitting in a multi-month, year-long range, it's anybody's ball game to see how this battle, comes out. So I'll have to just wait and see.
All right. And then next up, we will take a look at First Solar. I got it long on that. The solar industry's been performing well. This stock looks pretty great here. I am planning on holding it into earnings, looking for a breakout on some further strong results. You got any thoughts on the First Solar chart?
It's great. I've been talking about the TAN ETF, TAN, for pretty much the last 6-7 months since the year got underway, saying how it was showing relative strength. And I don't really do too much. I don't know too much about the solar space as much as you, Gavin. I know there's some particular names out there that are leading the pack. But for me, it's always just been the TAN has been my go-to, sit with ETF. And First Solar, obviously being a big player in that space, has been, helping to guide that continuously higher in that big multi-month uptrend. So I like it. As long as it stays above the 50-day moving average around 62, I think we're good.
All right. Then we'll take a look at Intel, INTC.
It's Intel. Everybody knows what it does.
Yeah.
It makes chips for computers.
Right, exactly. So they beat by 2 cents, beat on revs. Chips for data centers missed, so we want to keep an eye out on that data center area, which could always impact Nvidia. Basically, big cloud companies not spending as much on the server chips. Guidance was also disappointing there. So a name to watch, and one that has... trying to get the chart. One that has climbed back above its 200-day moving average here. So any thoughts on Intel going in?
This is another stalwart that basically you look at the longer term chart, it's trading right where it's been for the last year and a half or so. It does have key support in that $43 area from the last couple of years. So as long as it doesn't have some other, awful, I think what was it, last quarter where it just kind of collapsed off the highs there and broke down. As long as it doesn't undergo anything like that and undercut the $43 support level, it should be in okay shape. But again, this is one of those names sitting in the middle of over a year and a half long range that it could be it's pretty much anybody's ball game, depending on how the fundamentals impress or disappoint.
All right, next up we got Starbucks, which for my money didn't report the greatest quarter last quarter, but doesn't seem to bother anybody because this thing just keeps ramping up.
Yeah.
We got Starbucks and McDonald's, which will be out Friday morning, so we could discuss those two real quick here, Scott.
Yeah, so I can tell you this much. So my daughter had a birthday party, and now kids are just giving out Starbucks gift cards as gifts, as opposed to...
My niece, asked for a Starbucks gift card, too. I was like, what?
Yeah, and if Christmas, my nephews, nieces, everything, it's the same thing. My kids are always like, oh, can we go to Starbucks? They're never saying, let's go to Dunkin' Donuts. I'm a Dunkin' Donuts guy, but I'm also an old fart, so I can't really, argue with that.
Yeah.
But,
Yeah,
it is what it is. Both of them look great on the chart.
My niece and nephews still love the donuts and stuff. So, and then we're just running into the bell here, Scott. Last one we'll talk about is Twitter, TWTR.
This one, nothing really is to say technically. It's choppy, very choppy. We loved this one way back underneath $20.
I've had it in my
ago.
portfolio from 14 for years now.
We all loved it years ago, back underneath 20. It made that big, strong run up back in late 2017 into 2018, and then it basically gapped down, got too far ahead of itself. It's been consolidating, choppy the last year or so, but it's okay. I'm not excited with it. I honestly haven't traded it in at all this year. I don't think it's just kind of there.
All right, and Scott, I think that's going to do it for us then as we go into the close. So should be a fun week next week, though.
Yeah, for what it's worth, hopefully someone saw my post. I did hold a little bit of a swing short balance in Microsoft after getting short the rejection above 140 earlier this morning at new all-time highs. That worked out in our favor for just about a 3-point gain for a nice day trade there. But as I said, if it closed poor into the close, I would just keep a little piece on and just carry it over as a swing to see if any weakness comes about Monday, so I can squeeze a little bit more out of it, hopefully. And then that's pretty much it. That's it, Gav. No earnings here on a Friday, right?
Nope, never is.
Okay.
So, all right, cool. So we'll talk next week then.
Sounds good. All right, have a good weekend.
Have a good one.